there was a lot of funk in the trunk on this number, Ed, with respect to revisions, what wages did, of course,
Right.
Florence. What did you think of the jobs number? Decipher it for us.
Well, if you looked at the number precisely, the 134 number, if you actually believed that, that would tell you that we're exactly at full employment. And the reason for that is that's almost precisely the number that you need to keep up with population growth. So if you're creating jobs at the rate of population growth, that's pretty much what happens when you're at full employment. Now, when you were on earlier, Joe Kernan was teasing you about having nailed a number. You were way high, but he said if you built the revisions in there, you know, you'd be okay. And actually, there's something to that because, you know, as I always point out, I think the better number is not the monthly number, but the 3-month number. And that was about 190. And if you think about that, that tells us we're still in the recovery phase. I would guess we have another half year or so to go before we're at full employment. The only negative I saw in this was the rise in part-time work for demand reasons. And I think that's probably not a significant issue because the average weekly hours are okay. But I'd watch that one in the future.
All right, you know, I really have a love for the long maturities. I used to trade 30-year bonds back in the day. So the long end jumped. Now, I have my reasons.
Yep.
Let me hear yours. What do you think is behind the jump in the long end? The whole curve actually jumped, but the long end at least outdistanced on the jump because we see the curve steepening.
That's right. And the steepening is actually important because you never know. When interest rates rise, you never know in the short run whether that's demand determined or whether that's supply determined. In other words, interest rates can jump because funds aren't available. Interest rates can jump because everybody wants to invest like crazy, and that's increasing the demand. In this situation, I would say the fact that the point that you just made about the long end being the one that jumped suggests that it's more demand. And the reason is that the Fed and their policies tend to have more an effect on the short end rather than on the long end. So when you see it at the long end, that tends to suggest that it reflects strength in the economy, investment going forward. Of course, you know, the way that we'll know this is that when we look at the next 2 quarters and look at investment over the next 2 quarters, that'll pretty much tell us the story. But if I had to bet right now, I'd say that there's evidence that it looks like it's on the demand side, which is actually the good news scenario rather than the bad news scenario.
All right, for my final question, Ed, and this also is very important to me, when I monitor how the U.S. 10-year is trading benchmarked against other sovereigns, when I look at Boons, I see a distance between these two yields of historic wideness in the vicinity of 265 basis points. It was 8 or 9 basis points wider than that intraday on Wednesday. What do you think of that, and how should Mario Draghi think about that?
All right. Well, there are actually 2 issues there. One is the international comparisons, and one is what I would call the credit spread. You know, what you always have to worry about in terms of any kind of long-run implications and whether we're headed for overheating is you look at the credit spreads. When the credit spreads get too narrow, you kind of worry about that. What Draghi obviously is looking at is the comparison between our rates and his rates. And we have been more aggressive in the past couple of years at raising rates than they have. And of course, that's a concern in terms of flow of funds across international borders. So if I were in Draghi's shoes, I would be looking at that. As we know, it's a world capital market. There are some idiosyncrasies, some country-specific idiosyncrasies, but I'd be thinking about that pretty hard as well. So I think you're focusing on exactly the right issues there.